the Uganda shilling has continued to decline against the rising United States dollar since the previous MPC meeting in June. During the 2014-2015 financial year, the shilling depreciated by 24% against the US dollar, but by 14.7% on a trade-weighted basis. Exchange rate in recent past has been driven more by sentiments and volatility in international markets than by economic fundamentals. The pass-through of the exchange rate depreciation to domestic inflation is yet to be evident. Annual headline inflation in June 2014 remained unchanged at 4.9%, in large part due to a moderation of food crop inflation that declined by 6.6% on a month-by-month basis. Annual core inflation increased marginally, 4.9% in June 2015, compared to 4.8% in May 2015. The latest real GDP figures, which were released by the Uganda Bureau of Statistics, point to continued expansion of the economy, albeit at a more moderate pace. Real GDP is now estimated to have grown by 5% in 2014-15 financial year, compared to the growth of 4.6% in 2013-2014. Domestic demand continues to support growth despite weaker exports. Access to bank financing has continued, with credit growth remaining at healthy levels. Although economic growth outturn for 2014-2015 was less than what had been projected, the prospects are for the Ugandan economy to remain on a steady growth path, with domestic demand being the key driver of economic growth. The recent depreciation of the exchange rate has raised the risk of higher inflation. As we stated in June 2015 in the monetary policy statement, we will tighten monetary policy to avert any prospects of higher inflation whenever this happens. Therefore, and consequently, the Bank of Uganda will raise the CBR rate by 1.5 percentage points to 14.5% immediately. The bank on the CBR will be maintained at a plus or minus 2 percentage points, and the margin on the rediscount rate will be maintained at 3 percentage points on the CBR. The rediscount rate and the bank rate will therefore be increased to 17.7% and 18.5% respectively. We believe that this action will be sufficient to hold annual core inflation in the range of 8 to 10%, as stated in the June monetary policy statement. The Bank of Uganda recognizes that there are heightened risks to inflation, economic growth, and financial conditions. the Bank of Uganda will continue to assess these risks to the outlook and will not hesitate to take appropriate action.